Welcome to the 20th Montgomery Summit. You're watching Monty TV. I'm Jackie Karsh. Sitting down now with James Posnett. He's the general manager at ASX. Thank you so much for sitting down with me.
It's a pleasure, Jackie. Good to be here.
The ASX was traditionally filled with more old economy sectors, but we're seeing this trend moving towards the technology sector. What are you seeing? What are you noticing?
Yeah, look, that's absolutely right. I mean, half the market by market cap is financials and resources. And so that's actually a positive, though, in some ways, because the institutional investors want more quality growth assets to be listed on ASX. And so that's part of the reason why we're in the US actually looking for good quality growth companies to come and list down under and raise money there. The simple fact of the matter is we're a small country. We've got a population of 26 million people. So we're in a privileged position where we have the 5th largest pension market in the world, so about $2.5 trillion under management, and that just creates some incredible tailwinds. And in terms of investment, so in terms of the sectors that we're really looking for, it easily translates into tech and healthcare, of course, and has done over time. We've had over 100 tech IPOs in the last 5 years. And then also we're seeing those opportunities from overseas. So cross-border IPOs, we've had around 100 cross-border IPOs over the last 5 years as well. Notwithstanding, it's been a little difficult over the last 12 months.
How do you attract companies to the ASX, as opposed to them going to any other exchange?
First of all, at that high level, the pension market, we've got a lot of money looking for a home. So that is a great position to be in. But also, we still list small and mid caps. So back in the sort of late 90s, US used to list small and mid cap companies. In fact, Netflix, I think, was about $400 million company when it listed. We still do that in Australia. And the reason we still do that is partly because of regulation. So we have quite balanced but robust regulation, a little bit, I'd say a little bit more streamlined than the US market, for example. So you can come to market more easily. It's less costly to list in Australia versus the US. But the other reason is really the psychology of the public market investor. So we've been listing companies for 150 years, junior mining companies, which are kind of like the ultimate startup. So high risk ventures in the public market. And that's translated quite neatly to other sectors over the years, like healthcare and tech. And so there's a risk tolerance in the public market that allows an earlier stage company to list. The other aspect is the index inclusion. So we have S&P indices like the S&P indices here, and the main indices are the S&P, ASX 200 and 300. And so you can enter those indices earlier in the Australian market. So you can enter the indices maybe at $800 million market cap or thereabouts. And the equivalent would be the S&P 500 here. The entry point is about $12 billion. So you can see there's a huge disparity there. And so that sort of gap in between is where we actually see some real good best fit for companies, particularly in that sort of $200 million to $5 billion kind of range. At IPO, that's where we certainly see an advantage of ASX. And what we see then in the aftermarket is really good support from institutions, from analysts, but also in terms of valuations, that then feeds through. And we tend to see a premium in that range on ASX in terms of tech valuations versus the US. And that's sustained over time. So we've been analysing this data for 10 years, and it's absolutely the case, as is the case today, even with the downturn.
So that's your sweet spot. How do you convince a company that might be seeking private funding that maybe they should go on the ASX?
Yeah, look, I was talking to a colleague at NASDAQ earlier. In fact, we're on a panel together. And in many ways, there's this sort of public market versus private markets argument that we're both facing, and I have to put forward. And I think the old reasons why you list are still as valid today as they once were. So access to capital is a lot easier in the public market than the private market.
Especially in a rough market,
Especially in a rough market. And in terms of visibility and credibility, you get that from your listing, that you've got your house in order. It's a well-respected, globally recognized exchange that you're listing on. So you've got that as well. And then, of course, liquidity, which is kind of like the main reason public markets exist. That really is absolutely the case, that you are able to get liquidity.